Good morning. We made it to another week.
Happy day off, Michael Ross.
I know. Well, actually, those days are quite nice. Between like just hiding some eggs for the kids, you can just also work, right? Because the majority of the company doesn't work. So, so it is a nice day to just do some stuff still in between, and yeah. Well, of course, always making time for the podcast.
Did I see one of your employees in your corner office overlooking the Krakow Square?
Yeah, I just saw her post actually, and it's my office. It's my desk actually. So no, we have amazing office. I do miss it. We keep it open. Some people go there because they just don't want to work from home or they don't have the facilities. But I do miss it there.
Yeah, you gotta admit it's nice to have some kind of spaces. Working from home is great for a little bit, but then it's like, okay, you gotta get to that collaborative workspace. It's just
that's why I got my studio where I'm sitting now. This is 100 meters away from my house. So I still have all silence, not screaming, running kids, even though I love it to have them around me because they might watch again. But it's not too bad in here.
Awesome. Well, how was your guys' Easter? Both good?
Good. Same as Ross. Just a little one running around picking up eggs, and he had a different.
And eating by yourself, probably, right?
He had a different strategy. You know, most kids try and pick up all the eggs. Oliver would stop, pick up the egg, eat what's inside, and then get
it. That's a good. I kind of like it. I think it's a good one. You should definitely try it next time as an adult. Just start.
Yeah, too much sugar was a problem though.
Oh yeah.
They're even more active than before.
Yeah, more highs and lows.
Awesome. Well, this is a fun episode. We're talking about investing today. So investment, funding, all that good stuff, the recovery of travel, what it's going to take dollar-wise. So I think the way we should do it, since that we have a startup of the week today, we'll do the Bidruption report, and then we'll head into what's with the noise, segue into us three, chopping it up and talking all things funding. You guys ready to rock and roll?
I am.
Let's do it.
Yeah, the startup of the week is Apaleo. Last week I had Muse, which is a PMS, and they're really focusing on connectivity and make it as easy as possible to connect. And if you talk to any plane industries, they often naming Apaleo and Muse in one word, as they're both really focusing on make it easy to integrate. So it is fair to also mention this week Apaleo as a startup of the week, also because they raised investments. A few days ago, they raised $4.5 million funding. So they're really focusing on API-driven property management system. German company, so congrats to be the startup of the week. I think next week I'm not looking into any PMS or more or less technology because we had two PMSs in a row. But again, because also we had the episode today about fundraising, funding, and show me the money. That's why I want to mention Apaleo this week as startup of the week. So congrats, guys. Second thing I want to mention is, of course, the conference or things what is happening. I'm happy to announce that on the 21st of April. So that's in 2.5 weeks from now. I will speak at the Skift conference about loyalty and subscriptions. As some people knows, it's one of my favorite topics. I'm happy to speak in there. Other speakers are TripAdvisor, Marriott, I think some airlines and stuff. So it's going to be fun to speak about loyalty and subscriptions. So you can watch me. You can buy tickets already. So on 21st of April, I will be on the Skift conference. And that's it for the Bidruption report of the day, because I can't wait to discuss investments and funding and everything. But first we go to Mr. Goldin.
Hello. So this week is a bit of a call out on ourselves from the predictions at the beginning of the year, where we expected a lot of mergers and acquisitions, but with the continued amount of funding that's coming into the space, I think that's likely to delay the M&A activity. It doesn't mean it's going to go away altogether, but if you can get funding and not have to merge or be acquired, I would typically think most companies would go that route. So we were slightly wrong, at least in the first half of this year, on the M&A activity ramping up, but the funding has kind of outpaced where we had expected it to be. And I think we can chalk that one up for why. But got a really exciting show today, and talking about 3 brands that we know quite well in the short-term rental space. Apart Hotel really kind of fit the build of what we've talked a lot about on this show, building a brand for short-term rental apartment hotels. So with that, let's kick off.
Yeah. So what were the 3 brands that that were receiving investment that you were talking about?
It was the Guild, Mint House, and Sextant. Sextant
Okay.
is out of Miami. They've got a good bit of density in Miami and New Orleans. Mint House is out of New York. They took over a handful of Lyric buildings, but they like to play more in the higher end space. And then the Guild is out of Texas, and they play kind of in the mass market or maybe slightly higher in lots of urban core locations. I've stayed in units of each of these operators. They all do a really good job. Communications are smooth. Locations of buildings are great. And, they survived the pandemic. And I think if you're able to show the books of surviving a pandemic and maybe even making money, then it's a no-brainer to investors to help you get to the next level during this next year of travel. That's prices are going to be increased, like we talked about last week, and essentially their costs shouldn't go up, so margins should just increase.
Well, I think also that 2020 for vacation rental, and it wasn't too bad, right? It was still, if you look at the hotel space, was a disaster. For the alternative accommodation, vacation rental was not too bad. And if you're looking at the projections and everything, what is coming this year and next year, it seems to be pretty positive, right? You see the recovery there. You see, we talked about last week about pricing and everything. So I think the investors as well see the potential there. At the end, you might see some consolidation. There will be several brands. At the end, they will merge some stuff. So I think it's now just getting market share. I think some of them, they just want to be as quick as possible, become as successful as possible, because I know there will be some acquisitions probably in a few years from now, because otherwise there will be too many players in the same area.
Yeah, I expected a lot more M&A activity coming out of COVID on the vendor side, especially. Quite frankly, I'm a bit surprised that it hasn't happened, but I guess some more funding might have floated, or vendors ended up doing all right. As you said, at least on the short-term rental side, vendors, especially ones that play heavily in the traditional vacation rental markets, are probably having record years. So no sense in selling. It's really the people with super high exposures to urban operators. But that's also what's pretty interesting about this. We had a merger acquisition with Vacasa Turnkey a few weeks ago, which theoretically those companies should both be firing on all cylinders this year and last year with the vacation rental markets. What's interesting is that the 3 that announced last week are all heavy urban operators.
Yeah.
And essentially all are running hotels. They're just able to probably flex their inventory to longer term stays or midterm stays and keep the doors open.
My question would be, go ahead. Is it delayed for us?
Yeah. Okay. No worries.
Well, so my question would be then, how many of these kind of like vendors or other companies got onto the PPP loans faster than normal? Because I think that definitely, whether it's investment funding or actual just government assistance kind of funding, I think that could also take a good play. And I think might know this answer, Golden. For the 3, Mint House, the Guild, and Sextant, are they completely different operating models, like master lease compared to rev share compared to ownership slash, like how does that work with the three different ones? Are they all pretty much the same, or they're pretty different?
They were all master lease, and the majority of their properties have flipped to rev share. They don't own any buildings, and from my knowledge, they're not continuing the master lease. They might still have a few that they held on to, but I don't know that for sure.
Gotcha. Okay.
I do know that everyone tried to switch to rev share, which I think ultimately what we learned during COVID is that it's better for the building anyway, because if you go into default and you don't pay rent like Stay Alfred or Domio, it's better to have a rev share, on $100 than not pay rent on anything. So I think ultimately it's the same thing happened in like 2008, 2009. Lots of master leases were happening in condo hotels or different various short-term rental-ish type of buildings. And then it went away, and then people started saying, well, what if we started just guaranteeing you money, and then we'll take everything on top? And thus the master lease model started taking off, and easy to grow inventory when you're paying market rate rent, right? So it'll be interesting to see how much inventory both of these or all three of these companies can add without having to spend millions of dollars a month on leases.
Yeah.
Well, you can see there's
to your knowledge, Michael, did anyone in the hotel side ever guarantee revenue?
I think none of them. I think it's impossible to guarantee a revenue, especially now. But I think nobody did before, right? If you look at Bidroom, we charge the hotel some things only when delivered in X numbers of revenue. Are we going to give a guarantee? I think you can't, right? That makes it difficult. It's interesting to see because the branch you mentioned is all focused on the US, and I think this whole trend now with everything we mentioned in previous episodes, doesn't matter if it's the Lifehouse or the Mint or everything, it's really popular in the US. But if you're looking at Europe, it's still I think Americans more into this whole branding and everything. You can see, of course, the whole franchisees concepts. It's pretty popular in the US. I think Europeans are more conservative. They say, we'll do it by ourselves. We don't need any brand around it. And so you can see a big difference in this space in Europe. Maybe that's why you don't see many investments in the European market for something similar.
True. I mean, I think if you don't build the brand, then you're reliant more on the OTAs, which is fine. There are some big companies, urban operators. Altito is a good example, but Altito's never raised any money. So they've been able to build a pretty reputable, large brand without the big dollar signs behind it. There's a few others like Sweden that are multi-regional, but for the most part, you're right. Like the big ones, like Sonder has expanded into lots of European markets, and I don't know if the Guild or Sextant or Minthouse plan on doing that. My guess is it's more opportunistic versus strategic.
I think Europeans are less sensitive for this, right? They just don't care so much about a brand. You see, well, if we're looking at you, Michael, you are really committed to a few brands. Of course, you mentioned Marriott, Delta, etc. Europeans are pretty easy. They're swapping from brand to brand. They don't care so much. They're less loyal than Americans. So I think there's a difference there. And if you're looking for alternative accommodation, you don't care who's managing this. I think you just so I think there's a different approach there. And to come back as to the acquisition part, I think it's also maybe there are less acquisition because some companies, I think they're afraid, right? They had to fire quite some big numbers of their workforce. And then when you're spending millions in buying another company, you can see it will not be always appreciated. So I think also why companies sometimes just avoiding acquisitions. Okay, we just not go into this area because it's also a negative image, right? You just, before you fire 200 or 300 people and then a few weeks later, you're just acquiring a competitor. I think that's also one of the reasons that the acquisitions numbers is quite low. I think as well what you said, there was some funding, not a lot in travel. I think I just read an article, it went down, I think like over 40% less than the year before. So in 2020 it was 42% less investments, if looking at the amount, than in 2019. So, of course, you mentioned there was some help from governments, and I think you see most companies in travel, even though the big ones, they had difficult times. So I think it wasn't the best time for them also to acquire. I think when recovery starts, I think maybe later this year, you might see then, because there's a positive image again. People just in that case, they see some trust, they see some revenue coming. I think there might be a moment you see some mergers over acquisitions. I think the reason why it didn't happen before is really because almost all of them, they had to do layoffs, right? So it's difficult then to acquire companies spending millions. So I think it was one of the reasons as well, because of course then you're losing image. It's not good for your brand. So must be more reasons connected than only than the amount what they had still left to spend.
Makes sense. Yeah, I mean, it's you're waiting for the green shoots to show up and for COVID to be gone before you take the big bets and spend tens or hundreds of millions of dollars acquiring complementary or competitive companies. Makes sense.
Well, I was expecting maybe some more mergers, for example, or some brands. Okay, we're going to cooperate closer because of recovery. We might need each other harder than ever before. So I was expecting maybe more strategic partnerships, maybe with some brands. And of course, a long time ago, we mentioned maybe this at IAG and what was it? Starwood, I guess. We mentioned some potential cooperations. It doesn't always have to be completely like a takeover.
Yeah,
but everybody was pretty under sim. We work on Marriott, one of the predictions, but you didn't see many of them. I think everybody was more trying to survive their own company. They didn't look too much outside, which surprised me because I think if you work together, you can come back stronger. But I was expecting more kind of partnerships or maybe some mergers there, maybe not particularly acquisitions, but they were not there as I was expecting them, even maybe in technology partners or some of them or vendors, what you said. So we might see them later. I think it's keeping calm. People are waiting now. When I see some recovery, when everything starts to be kind of positive again, I think then the people are willing to make a move.
Yeah, it's interesting. I think on the vendor side, at least in the short-term rental space, I don't know the hotel landscape that well, but it's frothy, and I didn't see too many companies kind of close their doors and go away. So we'll see what happens after the pandemic if, like Will said, the PPP or what was it? Yeah, PPP.
Yeah, PPP. One of those.
Keep people afloat for long enough to get through, or they just help people keep afloat for a little bit longer, and then they get in desperation mode for selling or shuttering the doors. So
yeah, well, there's now the discussion, right? Do they get new funding from the government? Do they get new? Because of course they get around a year ago, they might get some help. Now it's like 1 year later, everybody's predicting, okay, next year going to be better. Now we're still in many countries in lockdown. Yes, vaccinations have started, but still recovery didn't really started so far. So
what's interesting is without conferences, like you don't hear the rumors quite as much, right? Like typically there would have been a few conferences in March, April, and we'd be able to call the predictions pretty easily because we know what's actually going on. But it's a bit in the dark this year. I don't know if you feel the same, Michael.
But it's the same. If you look at the investments we got, the majority of the people who invested in our company, we met them in person, right? And still behind the camera, it's about trust. It's about the main reason to invest in a company. It's still the entrepreneurs. Well, it's still different when you meet somebody in person or see somebody behind a camera. So I think still that's why as well, maybe really big transaction. There were some, of course, but I think the really big transaction or acquisitions didn't really happen because those conversations starting often after working times, right? With the beer and stuff, like how is your business doing and stuff. And if you look also at our company, some of them, they just invested because an informal chat. It started as an informal chat. And if you go to the Focusrite conferences again, or the Skift conference and all those things, you're just meeting so many people. And then I think that's also one of the reasons that those, like the not surprised kind of investments or acquisitions really pop up. The other hand, you see the interest. You can see also in our company, and we're looking at all possibilities. There were some acquisition possibilities or discussions as well, and also in investments, quite some. So we're more popular than before, which is good. But you also see that there's they're looking, okay, what is really, they're looking at the future. Okay, what is your projection for the future? Not really, they're not looking back a lot because, of course, the last year was completely different. So, but you can see the interest is starting again. You can see it's moving. You can see the venture capital funds, they're like looking more positive than a year ago. So I see there will, some things will happen. Just say it takes, I think the conversation starting now with many of them. As people see around summer, there should be some recovery starting. So I think soon after summer, I think you will see some bigger rounds, some more investments coming, because even if you look at the funds who are investing in travel, the Thayer Ventures house, they did maybe 2 or 3 investments last year, which is a really small number, right? For funds who are just investing in travel.
Yeah, I think the couple points that you made there. One, like I was at Focusrite 3 years ago, maybe, and the CEO of Turnkey, the CEO of Wyndham, and the CEO of Vacasa were all gathering, having drinks after hours. And sure enough, they're all one company now, right? Like it takes years to complete acquisitions and to, kind of break the ice and get people interested or intrigued by the opportunity. And then to your point, Michael, I don't necessarily agree that they just write off 2020. I think part of it is what changed in the market, and does this company fit the new norm, right? Mm-hmm. And I think that's why these 3 apart hotel companies helps them get funding. Like we survived. Our occupancy rates, hotel occupancy rates, let's see, mm-hmm. Screen, right? So if we can survive the pandemic, guess what? The biggest hurdle for people staying in short-term rentals in the past was doing it for the first time, was leaving their branded hotel, their loyalty travel company, and trying out this new type of travel. When Focusrite has done studies in the past, like maybe 33% of people who travel have even ever stayed in a short-term rental. But that number has climbed to north of 40% this year, right? So a 7% increase in total travel demand is pretty monstrous when you talk about, some hotels have gone out of business. Some of their competitors, Stay Alfred and Domio, have gone away. So I think, and to piggyback on what we've talked about on the show many times, like apart hotels are the future of travel. It's flexible. When travel demands ebb and flow, you can turn on more units in a multifamily building, or you can swap them back to long-term rentals, and you don't have these giant boxes sitting vacant. And hotels did a great job of being as nimble as possible, adding fitness studios or,
recording studios
or offices, mini offices.
Yeah.
So I think that was a good exercise, but at the end of the day, short-term rentals were better occupied, and I think because of the market shift there, it's probably easier to get funding from the short-term rental side than it is from the hotel side right now.
I think it's 2 sides. First of all, it's a trend, right? If you're in a VC fund, of course, when you're doing okay, often you have several options. So if you as a venture capital fund missing the opportunity because the company choosing for another one, you might look maybe at other possibilities, right? So the end you see an effect as well, like a domino effect, like, okay, if there's one get investment and the other one also pretty similar, they do have kind of the same, maybe kind of grow numbers, etc. You can see like an effect, okay, then you might invest in the other one. So I think you see some effect there as well. And then what you said, indeed, if you as a company can adapt to the situation, I think it's really important when they see, okay, in a crisis like this, what did the company do actually to still have a growth or just have good numbers or made a difference because they can come back stronger, whatever. It also makes sense, right? We see it, as I mentioned, in our company, because we have a different revenue model. You can see now, of course, you see the TripAdvisor and other ones you're seeing following our business model, which is good. So it also gives people seeing this, it's okay, subscriptions are going to be a new thing. This is something what might be interesting to invest in. So you can see trends are really important. And if you see a trend investing, you saw this a few years ago when you saw the big transaction of Amadeus in TravelClick, when they acquired TravelClick, what is it, for $2 billion or something, the interest and the valuation of all the channel managers that went up and everything. So because, okay, we are half the size of TravelClick if we look at the numbers of properties, so up, the valuations went up. So you can see there's a lot of trends there. So I think if there's few acquisitions going on or investments going on in a specific area, He saw it in streaming, in events and stuff. He saw it in there. So at the end, we see some investments in different kind of areas within travel. You might see the follow-ups again there again.
Well, I guess the question is, what's the prediction for this other half of the year coming up, or the second quarter, for funding or acquisition, merger? We did a prediction at the beginning of the year, and like Michael said, I don't think we're a little off on the merger and acquisition side, but didn't focus on the funding. So now, where do you guys stand? What do you think's the next step?
Yeah, I think funding is probably a trend that's going to continue on. People are sitting on so much dry powder, as Michael alluded to. There's firms that are typically doing 10 or 12 transactions a year, only did 3 or 4. So they're sitting on dry powder waiting for the right conditions. Mm-hmm. And a lot of the maybe desperate deals are gone from March, April, May of last year. So the valuations are going to be a little bit healthier for all of the startups. I still think mergers and acquisitions will happen at some point. I also mentioned it on the show a few weeks ago, but I think Vacasa is going to go public later this year, which will, again, to Michael's point, like when a company like that goes public, then valuations of others behind it increase, and there's a clear exit route. And the markets will probably accept Vacasa quite well, because their revenue numbers this year are going to be insane, especially adding in Turnkey's inventory, putting them, 25, 30,000 properties.
Yeah,
I agree. What's your thoughts, Ross?
Yeah, I think what Michael said, a lot of venture capital, they kept some because they might have to reinvest in a portfolio company. Saw a few of them, of course. You saw that I think they did in Beekeeper. So you see a few that's okay. We need another. They invested 45, and then 2020 they invest another 10 because it was needed. So you can see, I think they kept something. I think it will start again. And if we do another prediction, and it might be shocking, but I think that an Airbnb might go into subscriptions. I will not be surprised, and I think it will be. And I just want to mention this before they do. I will not be surprised because they're charging on two sides. But if this is going to happen, okay, I won't just be the new Google. But they're charging on two sides, right? In some countries, like Netherlands, is officially not allowed. There's some lawsuits, but they're charging the host and the guest. It really makes a lot of sense to create loyalty for the guests. So even Airbnb, and if they want to have some advice, they can phone me. Will be a high hourly hour, but no, kidding. But that really makes sense in my opinion, because if they want to create some loyalty with their travelers, right? In this case, they charge them per booking as well. And it's okay. We still monetize the other side as well to really protect our brand and make sure they maybe have some benefits or free can say whatever. I think it will be really clever move of Airbnb to go into this direction to monetize, or just in that case, so a subscription model as well, as it's really become really popular for travelers to do the same. And of course, the host still based on other fees. They probably will never stop with this. But I think it will be, if I can do a prediction, I will not be surprised if Airbnb goes in this direction. I also notice that if they can convert a lot of people into a subscription, because people are quite loyal to Airbnb. If you're looking at valuation-wise and everything, even though they don't care so much anymore about valuation because they're IPO, but still, if you're looking at the projections and they know, for example, we have 2 million paying users who's paying whatever X amount per year, it's really good for company results and projections. So I will not be surprised if this goes into more companies go into subscription to really boost the valuation with help, of course, and that might also maybe not help in acquisitions, right? Because in that case, the valuation goes sky high sometimes in subscriptions. But if I do a prediction, I will not be surprised if an Airbnb goes into subscriptions as well.
Yeah.
What do you think, Michael? Do you think it will happen?
We'll talk about it off air.
I know Chip Connolly mentioned that they were working on a customer loyalty program for Airbnb like a while ago.
Step one, right? Like,
yeah,
you have to build a loyalty program first, and then the loyalty program.
Yeah. But this is where I struggle with it. There's a lot of professional vacation rental managers. There's a lot of hotels going onto the platform, and there's a lot of individual homeowners that just own a small unit or either a whole home. nothing, whatever the smaller type inventory, and that creating a loyalty program with individual non-brands that own one-off properties. I find it hard to do. I think they're going to have one heck of a challenge, and I think if they go into that model where they're going to create a loyalty program, which means guests are going to get discounts, the host has to get compensated somehow. I'm not going to increase my rate 20% just so that way Airbnb can give it away at a discounted rate of 25 or 30%. So I feel like it's going to be one hell of a challenge, and I would not be surprised if there's a big host or property manager exodus of Airbnb and going to another OTA to find that replacement of lost revenue. That's just my thought.
I mean, of course, they're going to have to compensate the hosts. They wouldn't roll it out if they weren't going to be paying hosts for free stays. It's no different than, Marriott pays the hotels when points are redeemed,
but not a lot. Like not a lot.
No.
Yeah. No.
Okay, I don't know how it works. I just assumed there's.
Well, they pay them out. It's like a transferred currency in a sense. Like you have enough points for 2 free nights at a Courtyard, while Marriott's paying the Courtyard property like $35 a night, maybe. So it's like very bare minimum compared to the $110 they would have gotten for a normal stay.
Yeah.
So
yeah, hosts would revolt against that if it was going to be a 70% discount.
Yeah.
So
we'll see.
No, I don't think it'll be discounted. It's more to than that case because nobody's charging the traveler right for every booking a booking fee. They're just waiving the booking fee. Amazon Prime model as they are. Skift mentioned us was the Amazon Prime of the Amazon Prime of the hotel industry. That might become the Amazon Prime of the vacation rental. Who knows?
Stay 5 times a year and then don't pay the guest fee anymore.
Yeah.
For example, I would not be surprised. Makes for me a lot of sense. But if they're listening and they're doing this direction, just I think we earn some kudos.
Credit.
Yeah. 1% every year. That'll be great.
We'll be fine.
Awesome. Well, thanks, guys. We'll see you guys again next week, and I'm excited for more of our predictions to come to life.
Wait.
Bye-bye.